Monday, January 16th. Happy New Year. I hope your trading is off to a good start. It's an exchange holiday today. I have been so busy working on a new trendline feature for Option Stalker Pro that I haven't had time to get any of these videos out. That is all I've been spending every minute of every day on, and I should have something in about a week or two. That's going to fuel a lot of the future videos that I record. So look forward to that because these trend lines are going to be very, very special. Gone through a very intense selection process so that we can find those ideal breakouts. We'll talk a little bit about trend lines now, but I've got another key feature that I added to Option Stalker Pro that I want to discuss a little bit. Let's start with my last pick. FSLR was a pick that I highlighted on Wednesday, December 28th. And the notion was that I didn't like the way that the market finished the end of the year. I thought that there was some softness. I thought that we might see a little bit of a drop coming into the new year. So I was positioned on the bearish side. Now we had a holiday wedged in between there, and holidays are going to suck the living daylights out of the volume in the market. And time premium decay is also going to be an issue, but I felt that FSLR had shown me enough of a breakdown that I was going to get some quick follow through if the market did show some weakness. So here you can see this was when the trade recommendation came out. It was actually the day before on Wednesday. But if you had waited just until you could get past that weekend, so Tuesday was when the market was officially open, just doing that alone, you could have bought that spread for very, very cheap, like $1. I think we were looking to get in at $1.60. This is buying the January 6th 145 puts on FSLR and selling the 140s, doing that for a debit of 160. We're going to have 100% target profit on it. I said have that order working. These options are ticking away as far as time premium decay. So if we hit those levels, you'll want to exit the trade. But in any event, you can see how nothing really happened, and the move that I was looking for in the market also didn't materialize. The market's actually found pretty decent support. But FSLR did finally crack down. This is the Thursday before option expiration, and you can see that the low was about 141.80. So these options were $3.20 in the money intrinsically the day before expiration. You should have been able to have a double in there if you had the order working. If you bought them at $1.60, maybe not, because they would have been $3.20 and those 140 puts would have still had some value in it. So I can't micromanage the positions. When I give you a trade recommendation, it has to span many days because I don't know when I'm going to be able to do my next video. But this should have been a nice little winner. But if you didn't have that target working, it bounced with the market. And in fact, if we look at FSLR, the chart now is actually quite bullish. You've got this upward sloping trend line here. This is a classic bullish flag formation. Got your little downward sloping trend line and a breakout in here, and now the stock is off to the races. So I'm going to talk about a feature that I added, and I can see a couple of them right here. These hollowed candles I reference as key bars. And I've had a lot of my members ask me, how should I be using these key bars? Well, I developed them because I felt that they were very relevant. Didn't even have a proposed trading strategy or a tactic around them, but now that I have them on the chart, now that I can see them, yes, there are all sorts of applications that are coming to mind. In fact, this is a variable that we're going to add to custom search so that we can search for these bars. Let's backtrack just for a second and go back to the market, and we'll come back to FSLR. Here you can see this is the S&P 500, and by zooming out, you can see that this long-term downward trend line comes into place and this long-term upward trend line comes into play. This is where we were just before the start of the year, and you can see how we had this big compression. Really not a lot going on. We're below the major moving averages. Last week was pretty bullish. The market actually got off the deck, got above the 100-day moving average, the 50-day moving average, and it closed above the 200-day moving average. I wouldn't read too much into these moving averages right now because we've got this wedge forming. This downward sloping trend line, what we refer to as a high minus, this upward sloping trend line, which we refer to as a low plus because it's connecting the lows and it has a positive slope. This is connecting the highs and it has a negative slope, so high minus. In any event, these moving averages are being breached with regularity as we start to compress and compress. We've had pretty decent volume. I'm looking for a big breakout one way or the other through this wedge formation. Be careful if we see this upside breakout right here, not to just assume that we're off to the races, because this is a longer term trend line. This is still the prominent trend line for the year, telling us that there is downward pressure. If we break out, just be careful early on because we want to make sure that there's nice follow through. Oftentimes you'll see a breakout to lure in bullish speculators, then the door gets slammed as they bail out. This was actually the real breakout to the downside. So be careful when you're watching these wedges form, know which angle has the longest duration to it. And right now, it's this one right here. Plus, it's the most gradual sloping one. Trend lines that are steeper are more easily breached. So let's see how this plays out. Things right now, they look pretty good. There's an old market trading tactic that how the first week plays out, the year plays out, and that's proven to be true about 75% of the time over the last 100 years. To me, it's interesting, but it's nothing that I'm going to trade off of. I hope that it's true. So let's watch how this all plays out. I have to be very, very neutral in here right now because the market could go either way. I'm a little bit bullish biased just because of the way that the week has kind of started and everyone's looking for a big market sell-off. So I'm going to be looking for a bullish pick today, but my bias is really neutral. And if we take a position, it's probably going to be maybe a credit spread of some type. We do have earnings season starting this week. So actually, we had the banks on Friday. Banks had a little bit of an early negative reaction, but they were able to, for the most part, recover from that. So as tech earnings lie ahead, typically buyers are engaged in the market, and that lends some additional support. So those are some things that I'm currently looking at right now. Let's talk about key bars, what they are, how we can use them. So a key bar has a very big range for the day, and the body of the candle, like right here, consumes most of the range for the day. That means the tail and the wick is very small. And then we also have decent volume. Well, that just intuitively seems like it should be an important bar for us. So let's make it stick out on the chart so that when we're looking at it, we can reference it. So one application that I've been able to find, and I think it's fairly effective, it's not something that I've gone back and back tested. Here's how it works. If you have a long green or a long red candle, you're going to stick with that as long as you're trading below the close of it. So it makes sense. It's been able to preserve that close. And you reverse if you are above that key bar. So if the market rallied above the open of that long red bar, it would actually be a bullish sign because all of this selling pressure has run its course, and now we can see that buyers prevail. Right here, you would stay short because that open is preserved. Oh, we get another one. So let's move that down here. Now we start getting another red candle in here. There's a green candle closing on the high. So this is where you'd probably, because this red candle open has been violated, this is where you can take profits on your short position Would you go long necessarily right here? Well, I've got another red candle here with an open here. Maybe I should wait a day to see if we can eclipse that. Oh, no, that didn't happen. In fact, another long red key bar that is below the open of this long green key bar. So we would want to be short here. Now this also suggests that we've got some pretty extreme volatility in here from a day trading perspective when you see two long key bars that are contra to each other, next to each other. That tells you there's going to be some pretty big volatility. So we're below the open of that green key bar, and now you can see how the market continues lower. That is preserved, no green bars in here. There's another red bar, so we use the open here, another big drop. So now you can see that that open is still preserved and you've got a green bar, so you'd want to be long in here. The profit taking part of it, a little bit up to you on how you want to do it. If you've got a lot of green bars or red bars, you can use them, but if they're fairly sparse, you get a nice big drop like that and a bounce and a higher low, you want to take profit somewhere in here. It's a higher low double bottom. So there you're bullish on that. Now you get back bearish again because you've got a long red bar here and you're able to preserve that open. You get your next drop in here. Now you've got some mixed candles in here. You've got a long green bar though, and you're able to get above that. Now another one. So you're going to be long biased in here. You stay long biased all the way in here. Now you've got a red candle. Probably be good to take some profits in here. So you want that open to be preserved on that green candle. And now you can see how you're below it. You'd be short there, be flat here. It's just a way to measure and gauge. Now on some stocks, it's going to work out much better than others because they have a trend, which what I've just shown you, you might think, this is not really anything that special. Well, it's the S&P 500 and it has been chopping back and forth. But as soon as you look at a stock that might have some pace or some trend to it, then all of a sudden these key bars tend to have a little bit more relevance. And so right here, you've got a red key bar, you're above the open, there's a green one, so you're going to have a long bias in here. You're going to be long in here. No real, I mean, you're below the open of that long green bar, so this is where you'd be taking profits. So you run up, got nice position, long green bar, preserve that open. Nope, okay, time to take some gains on the position. So that's how it would work, and I'm going to put up a couple of charts. You can see you just want to stay with the prevailing key bar as long as those opens are preserved. And so there you've got some more green key bars. You're above them, starting to stack them. Below the open here, take some gains. So this is at least one application that I see. I'm also going to be able to use them in conjunction with other technical indicators. So we'll be able to search where the last key bar is. Are we above the close? If yes, then we want to stay bias in that direction. If we're below the open of it, then it actually would be a contra indicator. Let's go through a few searches. I'm going to look for a trade that I can leave you with, and we are going to go through our green royal flush search, take a look at some of the stocks in here, and we'll see what's moving. Actually, quite a few. This is too choppy for me. Way too much going on here. That was a pretty big drop though, and you can see how the stock does make some pretty big moves, so I don't really see anything for me to trade there. I'm just going to flip through a few of these and see if we've got something interesting. This is not bad. Alibaba, you can see, is through this long-term downward sloping trend line. That's pretty good. We've also got a shorter term downward sloping trend line. My only knock on it is that this is a pretty big move. I'd rather get something that's just on the verge of breaking out. Caterpillar, nice breakout here. You can see above a high plus trend line right in there. Another one right in there. So this is actually pretty attractive. This is a nice higher volume breakout. Would I buy calls on Caterpillar? Not given my market bias right now. I would want to sell an out of the money bullish put spread. And you can see that trend line coming in here, clipping the top here. I'd want to be somewhere inside of this horizontal breakout, probably down around the 235 level if I could. That would give me plenty of support between the stock price and the short strike price of my bullish put spread. But let's see if we can find something better. We're just going to continue to click down. One thing that you will notice, this is a little bit of an exception here. When you get these big drops, there is a bottoming process that takes place, and this bottoming process can last 6 months in this case. Now that the trend is pretty much gone, this is just horizontal, and you've got a range there and there, and now we're just compressing in that range. When you get a horizontal breakout, let's say above that 200-day moving average, yes, I would consider that pretty valid. And so we're going to drop a trend line there, GTC. It's just a horizontal line. Whoops. And we'll drop one there, which is right at the 200-day moving average. Incidentally, in the near future, in Option Stalker Pro, you're going to be able to set alerts based on these price levels here. So if you see the 200-day moving average, you'll be able to use that price level. At this stage, it's not going to adjust like the major moving average does, but that's also in the plans. Right now, the focus is 100% on getting these automated trend lines out to you as soon as possible. So the point I was trying to make is when you get a big drop like this, the temptation is always to buy these little bounces. Those bounces are shorting opportunities typically because this is going to take a very long time, and those are just dead cap bounces. So if they've only happened for a month or two, be very, very careful. There's a better chance that that is a shorting opportunity and not a breakout to buy, because everyone's always thinking in terms of, oh, look at how far this stock fell. If it just goes from here back up to where it was, I'm going to be rich. That's not the mentality you want to have. You see a drop like this, your mentality is, give me a nice bounce so I can short it. This one, because it's been able to flatline like this, could be ready to actually make a decent move, and that's why I've got my alerts set. Take a look at a few more, and you're going to see many of these. There's another downward sloping trend line that's just on the verge of being broken here. So this stock did sell off hard here. This is more like a V bottom, almost a capitulation low, because in here it was really not doing much of anything. This could be a little bit of a capitulation. Watch Chinese stocks. They could start gaining some traction. This is actually a pretty nice little breakout here. You've got an upward sloping trend line here that it's challenging. You can see that visually. And you've got a nice downward sloping trend line right here. May not want to use that particular candle because that was an earnings announcement. But if you take and draw a trend line from this open right here, you can see that that is a nice little breakout. Here's the other trend line I was referencing, is we're going to connect the high from right here to these highs right here. And then you can see where the stock is actually challenging that as well. So you'll have two breakouts. You're going to have a high plus breakout, and you've already got a high minus breakout, and you've got some pretty nice volume. I like this. I think NUE could actually go. It's got a nice base in here. You've got a series of higher lows. That's good. Another higher low here. Find support at the major moving averages. It's above those. NUE is going to be your pick of the day. Let's take one quick look. We've got earnings on 126, so we've got about 10 days to see a little bit of a breakout here. And the relative strength has been excellent on heavy volume. I like NUE. So let's see how can we play this. We've got at least one expiration cycle that we can trade. So we're going to take a look and see if there are any options available to us. And we've only got the January 20th options expiration available to us because of the earnings. And let me double check here. The 26th, yes, that's going to be the only one that we can use, because the 27th is options expiration, and we want to make sure that these bullish put spreads expire before the earnings announcement. So let's see if we've got something set up. I'll go pretty close to the money on this. I'm kind of liking this breakout in here. And we'll take a look at the 150s. They'll still give us some room. 150, 147. I need to get at least 60 cents for that. 150, 148. The premiums aren't quite there because we've got such a short amount of time left, only 4 days until expiration. So let me continue to look. You know, if the stock, let's do this. I'm going to take a look at these shorter term options. Now we're going to want to buy premium. We want to buy past options expiration because we are long premium. And when we're long premium that spans an earnings announcement, that means the option premiums tend to retain their volatility much better. So here we're going to look at a 160, buying a 160 call, and trying to make just a little bit of money off of it if the stock starts to rally. So I like these. These are currently 325, 355. Again, they've got plenty of juice in them. Make sure to sell them before options expiration. Here are the caveats to the trade. We want to see the stock get through this upper resistance point here. So that line comes into play. It closed Friday at 157.56. So it doesn't need to go far, somewhere even 158. As long as it's above the high from Friday, we'll take a position. We want to see that continued relative strength. So when the market opens tomorrow, Tuesday, we want to see the stock continuing to push higher and higher. So that's the 5-minute chart. Here's the 15-minute chart. We want to see this continued steady price action. If we get it, then we're going to want to buy those 160 calls. Try and get them as best you can. We've had a holiday in here, so perhaps you can pick them up for $3.30. I'd be looking to buy them in that type of range if the stock opens well. What about the market? What do we need to see out of the market? Well, we know we've got this wedge formation. There's the reaction to the banks being down a little bit on Friday after earnings announcements. And look at that reversal and the close on the high. This is a pretty good showing by the market. Not fantastic volume. And I'm fairly neutral on the market right now. But we are above the 200-day moving average. So your marching orders are, if the stock is strong on Tuesday and the market opens above the 200-day moving average, then you have a potential trade. And we'll be taking a look at this. Got to know that your upside for the market's a little bit limited. Yes, we've got a lot of earnings coming out that should keep buyers engaged. I think we're going to continue to see a little bit of a float higher. If we get that, we've got some pretty decent breakouts on NUE, and the trade should work out. I would not look to make lots of money on this trade. And it's something that I believe was going to continue to grind higher. Could you do a diagonal? Could you buy the 160 calls for this expiration and sell some of the January 20th calls? You'd have to go above the 160 strike price. Yes, you could certainly do something like that if there's any decent premium in them. And yes, the 162.50s might work out pretty well. The 165s, at least from my personal perspective, I'm not getting enough money at 40 or 50 cents to make it worth my while to cap that trade off, and I would want to preserve the flexibility to just get in and out of one long option instead of having to unwind a spread. I don't plan on being in that trade very long. If you can make 50 cents or $1 on it, I think that's a very nice return in this market given that conditions are neutral. I hope this video helped you. Really working hard to get some fantastic new features into Option Stalker Pro. So look forward to that. And then once I have that, then I'm going to be wanting to showcase you all these gorgeous trend line breakouts that we're able to search for. Good luck with your trading. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.